huge candle up. Okay, everyone see that? And this is all the traders in the world, in all the different countries, all the different banks, all the different hedge funds, all the different insurance companies, all the different manufacturers that have to, use the forex market to conduct business. They all created this huge candle body. And now, in the next 15 minutes, well, it's a much smaller candle body. But the wick, and remember earlier I mentioned there's a lot of information in these candle wicks if you really know what you're looking at. The candle wick went quite a bit higher, but the sellers pushed the price all the way back down. They couldn't push it down far enough to make a down candle, like a white candle. Do you understand that? But they did push it down to the point where it was a much smaller candle body. And here's a little bit of the whole DNA thing. The close of this candle, the top part of this candle, the close of this candle was lower than the high of the previous candle. So they said, okay, we're going to push price down, and they pushed it down, but they pushed it down underneath this high. Okay, that's a clear sign that this may be a turnaround in price, but not just yet, because we're still making bullish candles. The candles are all, bullish in color. And on this chart, the black candles are the up candles and the white candles are the down candles. But on many charts, the green candles are the up candles and the red candles are the down candles. So everybody understand that. They pushed price up, but when they closed this candle, I want you to pay attention that the close of this candle was underneath this high. So there wasn't enough energy to make a new closing high here. Do you understand that? All right, let's go look at a more traditional trend. You see where the high of this candle was? I mean, you see where the close of this candle was right here? And when we had our next black candle, the close of that black candle was higher than the close of this one. Then we look at this candle. And now a new candle opens and the close of that candle was higher than the close of this candle. So we can see this is clear strength in that direction. And when we get to, price act, and when we get to candlestick DNA, we're going to go over this quite a bit. All right, because there'll be a number of things that you'll start to pay attention to. So all the traders in the world, and remember, we're not talking about 2 or 3 guys sitting someplace in Kansas or in Afghanistan or whatever. This is all the traders in the world made this huge candle. Then they made this smaller candle body, so they're not pushing price up as much as they want. And it closed underneath this wick. Now look at this candle. Okay, this candle had a wick that went maybe 1 pip above that, maybe. And now the candle body is even smaller. Body is even smaller now than the prior candle, and the prior candle body is even smaller than that prior candle. Okay, and this candle closed underneath this candle wick. You see that? Is everybody clear on that? Are there any questions? And like I said, when we get into the price candle, we get into candlestick DNA and break it down by the candle wick. The same way, like with the price trap, like you all know now, it's 3 candles you need to start a trap. When we break down, you'll see it'll be the same kind of rules. So you won't have to guess and scratch your head and go through all that nonsense. All right? So we had a huge candle body. Then we had a smaller candle body, high of the big candle body. Then we had an even smaller candle body. And then on this candle body, the wick couldn't even get up here. And then all of a sudden, we get this pin bar where price, they tried to make one more push to get to this level. And this time, not only did the bears push the market down, they pushed where the close of this candle was lower than the prior. So not only have they pushed it down to where they started, they pushed it down to where they even started. And it topped out right near a prior top. Okay, Tony's saying my audio is choppy. Is my audio clear with everyone else? 1, 2, 3, 4, 5, 4, 3, 2, 3, 6, 8, 9, January, February, March, April, May, June, July. Okay, I'm not sure what's causing the chop, and I wouldn't know how. Okay, so it's better now. Okay, so does everyone see that? They not only pushed price down, they actually made a bearish candle. And the close of that bearish candle was lower than even the open of the prior candle at a prior high, within a couple of pair high. That gave me a huge clue that this was going to go short. And now, add to that, I've got my price trap. And in my price trap is this pin bar. You see that? Inside the price trap is this pin bar, giving me a big clue. They did big candle, little candle, opposite candle. So it's getting smaller and smaller and smaller and tightening and tightening and tightening. And all of a sudden they made an opposite candle and a pin bar. This is why, Mike, my bias was short, because I had evidence, chart-based evidence. Okay, what was my evidence? Was the candles were getting successively smaller, and the highs of each candle were having a hard time stretching out to new highs. The candles were getting suggestively smaller, and the candles were closing underneath the wick of the prior candle. This candle closed underneath this wick. This candle closed underneath this wick. And then all of a sudden, I've got a bearish negative candle. Okay? Does everybody see that? Now, are there any questions? And Mike is saying, why not the price trap from the earlier high? Well, this is the earlier high, Mike. Is this what you're talking about, Mike? These two candles, this price trap here? Is this what you're talking about? Yeah, that would have worked also. And I just want to point this out to Mike. I'm going to draw this, and I want you to see this big price trap right here. Does everybody see that? We have the two candles, three. Am I correct, Mike? You got two candles, and you need three. You got 1, 2, and then you have the trap candle. You agree with that, Mike? All right. Let's draw. Let me draw a line here. I'm going to touch on that in a minute also, Mike. So this would be 1 times that box. Oh, this would be 1 times that box. This would be 2 times that box. That price trap broke out short and gave us twice the width of the box as a profit target. Yes, Mike, it is a valid trap. Now, but did you see that? It's a 3 candle pattern. You gotta have the 3 candles. If you don't have the 3 candles, you don't have a trade. Do you understand that, Mike? Now, the reason I picked this is that I was, like, every day I'm always looking for a trade that we could take live. And this unfolded as I was talking. I could have just hit the button and entered here, but I was in the midst of explaining a few things. But I pointed out where I would enter. I pointed all 3 entries, and all 3 of them would have worked. This was clearly a winning situation here. All 3 entries would have worked. Okay. Now, when I say location, 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 you see this flat top here, Mike? If this was all I saw on the screen, and I'm going to put a line here. Okay, let's say this is all I see on the screen. Forget everything from this point back. We can't see it. You with me, Mike? This is all I see on the screen. I see these two tops. I see a price trap. So I'm going to go from these two tops. I'm going to put a line out at the high of this candle. And you see how it made a little bit of a range, Mike? Waiting for, okay. So now I'm going to go back in the past and I'm going to see if this to have stopped right here in this range. So now I'll go back a little bit in the past. I may have to squeeze the chart in a bit, but let's see if there's something back here that would have caused price to stop there. Squeeze it in some more. I don't see anything yet. Let's go to a higher time frame. And oh, here we go, right in here. See that? We got these highs, and these highs. We come back to this the right way. What I want you to notice is that you see these candlestick wicks? You see this candlestick wick, Mike? You'll notice none of them closed outside of this little channel we drew. You see that? Do you follow me on that, Mike? When I see a dramatic stop like that, I go back and look, does it make sense on the chart? Now I want to look at the historic sense on the chart. Oh, Daryl is saying currently we're experiencing about a 3-second lag. I don't know what you're talking about, Mike. Do you see these 3 candlestick wicks here, Mike? I'm not sure what you're talking about when you say of the 3. What I'm pointing out is that nothing closed outside of this channel. That's really what I'm trying to get you to see. This is where that stopped. Okay, let me see if I can pop in just a little bit more. Okay, this is good. So you see, this is that wick. So I want to know, why did everything stop right here? And as I go back in the past, I have evidence that the last 3 times we touched this area in this box, price fell like a stone. And now, lo and behold, after all this great length of time from January 29th, we've come back to this price again. Okay? And if I go back to my 15-minute chart, if I'm going too fast, let me know. If I come back to the 15-minute chart and I see a price trap on this 15-minute chart, if I can go back in the past and say the last time we were at this level, price fell like a rock. That gives me confidence to bias my price trap short. Do you see that, Mike? I'm adding an extra piece now, because once you understand the core of price action, then you look for evidence. Because remember, the chart never lies. The chart never lies. We just need to learn how to hear or read what the chart is saying. Does that make sense to you? Does that make sense to everybody else? Is there something I can clear up for anyone? This all comes under location times 3. Tony, I don't know what you mean by location times 3. Mike Schumann, not sure I could do it myself. I almost think that anytime one looks back, there is prior resistance eventually. No. I understand what you're saying, Mike. I can look back on any chart and find prior resistance. But the key thing I mentioned, and this comes into candlestick DNA again, is look at this area here. And this is what I want you to see. The last time Now, look, we're in this area right now from the highs of these candles, from the close and open of these candles to the high. You see that area? This is real important that you get this, Mike. Okay? Nothing, we could not get a candle to close above this area. Are you with me with that, Mike? Does that make sense? Okay, nothing has closed above this area. So let me go back in the past and let me see if anything has closed above this area the last time we were here. The last time we were here in this price area, what happened? So now if I go back, I guess I got to squeeze it in a bit. Now if I go back to the last time we were here, which is these guys right here. You see that, Mike? See this candle right here? You see these guys right here? Oh, wait a minute. What am I? Wait, let me make sure I go into the right spot. Okay, my double pink line I'm looking for. Okay. Now, the last time we were in this area, notice that a candle touched it and could not close outside of this area. Do you see that, Mike? The last time we were in this little channel that we drew. Mike? I'm not talking about before that. And there's more evidence about that here. I'm talking about the last time we touched this area. This is the last time we touched it. Did we close outside of this area? This is crucial. No. That's why I keep mentioning closing price, closing price, closing price, closing price, closing price. Okay, Philip 919. Isn't price trap just a candle pattern? Something used to finesse an entry at an area we already recognize as a place we would like to do business? Yes and no, Phil. Okay. Price trap is an indication. It's not a candle pattern. It's a psychological pattern. It indicates that neither the buyer nor seller, from a psychological point of view, has decided which way this market is going to go. No one has stepped up yet with enough money to drive the market in one direction or another. That occurrence usually happens at a price point somewhere in the past where they got stuck before. And now they're right back there again, and they're looking at it and they say, aha, the last time we were here, what happened? You get me? It's a psychological pattern, Phil. And when we get into the candle psychology, it'll be very, very clear. But even if we go back to here, Mike, and I don't know what this looks like on your side, by the way, if these candles are too small. Here we had a close above, but we couldn't stay above it. Here we had two candles that closed inside the area. Get what I'm saying, Mike? We had two candles that closed inside this zone, but nothing could close above it. We had two candlesticks stuck their nose up, and they both came right back in this zone. Here we had a candle that closed above it, but on the very next candle, it came right back down. So at no point were we able to sustain a break above the top of this channel. Is that clear? It's the closing prices that give these prior support and resistance areas their power. It's not the candlestick wicks. So I want you to understand that. If this area was broken, we would have a couple of candle close, maybe a one candle pullback, and then it would have taken off. Then we know that this area is done. But when one candle closes above it and the next candle comes right back underneath, and look how many times it's done it. Every time we've been here. Every time. How could I not think of going short when we get right back there again? And everything here tells me that they don't like this area. There's something about this particular bundle of prices where they have a hard time pushing above it. Does that make sense to you, Mike, now? Okay, for me, Mike, I don't know what you've learned in the past, and I think that you're applying stuff you've learned in the past to what I'm trying to show you. Okay? And I'm not saying forget what you learned in the past. What I'm saying is try to learn what I'm showing you as a separate entity and then add that to what you've learned in the past. That may help you. I'm not saying what you learned in the past was wrong. I'm not knocking anybody's education. I'm not knocking any of the gurus out here selling $5,000, $10,000 classes. That's not my goal here. All right? My goal is to show you how to make money with these charts. So when you have chart-based evidence that this is a very, very strong area of resistance, this is a strong ceiling, and we haven't been back to this ceiling in quite some time. And now here we are again. Okay? And it's forming a price trap. And it's forming a price trap near that area that it has rejected every single time it's been here. I have every reason to suspect that this pin bar is telling me that they're going to reject this again. That's why my bias is short. Okay, Mike, you are way, way, way overthinking it, Mike. You are way overthinking it. Keep it simple, 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 simple. All right? Does everybody understand that? Are there any questions there? So with many of these patterns, it's about location, location, location. And we didn't, discuss support and resistance yet. We'll probably get to that in the next couple of days. Does everybody get that though? It's location, 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 and chart-based evidence. I want evidence on the chart. What has price done the last time it was here? Because price doesn't lie. Is a coin toss strategy with simple trade management a good exercise for people who complicate trading? Yes. And I'll give you what this is, and I'll give you a simple thing you could do, and most people won't do it. I did it. I've done it a couple of times because I'm not the normal kind of guy you'll come across, is the best way to put it. Take a coin, and you can do heads, I'm going to go long, tails, I'm going to go short, let's say. And what you want to do is take every trade with a 2-to-1 risk reward and flip the coin 100 times. And you're going to have some losses, you're going to have some winners. But you'll see that by keeping the 2-to-1 risk reward ratio, on average, you're going to get about 50 wins and 50 losses. You'll see that you can make you'll make money over time. Can you make up a rules checklist for these setups? Yeah, well, you guys could be doing that yourself. I normally don't do that. I ask the students to write their own book, and then I grade the book, and I'll make changes to it. Because when you write it yourself, you burn it into your brain faster. You understand what I'm saying, Bull Hamster? Yeah, coin tosser was mentioned by Van Tharp. And it does work. It absolutely does work. And you'll see, as long as you keep your risk reward within reason, a 50-50 coin toss will be profitable. Okay. So I'm reading the questions. So on the video, if you hear me go quiet sometimes, I'm reading the questions in the chat. All right. So are there any questions on what we just talked about? How do I read the current developing pattern right now, Jose? Is that what you're asking me? Okay. I'm going to ask the room, how do you read this current developing pattern? Because that's one of the exercises. You turn on the chart and you say, where am I in price action? That's the exercise. Where am I in price action? Okay, I see a few people, but don't worry about it, Jay. You're supposed to be totally lost. Okay, Mike is saying an uptrend. Um, Calzone is saying a 4-hour trap. We'll take a look at that in a little bit. B, news spike. Sean, because the current candle is not closed. Because the current candle is not closed. Uptrend. Okay. Let me start here. We are not in an uptrend. Okay, let's start right there. We are not in an uptrend. Okay, why? Because in order to make an uptrend, first of all, this push up, this drive up, had to close above this high in order to keep the uptrend going. Do you follow me on that? So now, in order for this to be an uptrend, all of these candles right now, we have to get a close above this high. Then I'll consider it an uptrend. Until that happens, we're still in a downtrend, because if you look at chart-based evidence, I have, let me get rid of some of these lines. If we look at chart-based evidence, I have a the highest high on the chart right there. I have a lower high right here. This could possibly make an even lower high right here. And in a downtrend, you get lower highs. I have a low right here. I have a lower low right here. I have a lower low right here. When you're in a downtrend, the lows get lower. When you're in a downtrend, the highs get lower. So until I get a close above this high or a close below this low, I have to consider this a downtrend, because I do have two successive lower highs. Now, yeah, you got to look at the whole screen. The last few candles will give you information on the immediate DNA of, like, where am I in the 4 building blocks? That's what the last few candles will give you. On the last few candles, yes, this is a bit of an uptrend. But on the whole chart, we're still in a downtrend. So the last few, if you remember, I said when you turn the chart on, look at about the last 8 candles or so to give you an idea where you are in the DNA of price action. Which building block? Remember, it's building blocks. So we're in a downtrend, and this building block right here is the pullback in a downtrend. Okay. Now, Jay, you always start now as we put together a trading plan, Jay, you will determine which chart you want to take most of your trades on, or which chart you want to look for your setups on. And that's the chart that you'll be targeting initially. Okay, yeah, I understand this is what you saw, Mike. You said you saw several candles with higher lows, right? But this is several candles with higher lows too. That doesn't mean the overall chart is in an uptrend. You get me? You got to look at the whole picture. So right now, this is basically a pullback in a downtrend. Does everybody catch that? If not, I will go over it again. because it's easy to get tricked. This is how people get I won't say tricked, how they misinterpret what they're looking at. Okay? So for this downtrend to continue, once this starts heading south, it has to close below here. And then I know the downtrend is continuing. You got it? If these candles continue to push up and I get a close, and then again, I'm going to say that word again, I get a close above this line, then I'll consider it to be an uptrend. But what might happen more often than not, and let me get rid of these lines, you may get a situation where we don't make, I'm just going to draw this out. And let me make these yellow so we can see them a little bit better. And again, you'll be able to see this very clearly. Okay, so this is what might happen. We might get something like this. We might get something like that. And we might get something like that. If it doesn't close above this high, and if it doesn't close below this low, okay, what might happen in here? Anybody? You got it, Mike. Yep, it could form a wedge because we didn't make a new high and we didn't make a new low. Okay, and now we know we have a simple way of trading a wedge. And this could be a trap on a higher time frame, bull hamster. It absolutely could be. But I want you to be able to see what's going on this chart first. Because remember, if we see a setup on this chart, on a 15-minute, we want to go down to a 5-minute or a 1-minute to get into the trade using the smallest possible amount of risk available. All right, we don't have a trap yet. Remember, we need 3 candles for the trap. And the other thing too with the trap, anytime you get like a huge, humongous candle like this that makes a trap, if this candle is out of sync with the surrounding candles, that may not be a good trap. And what I mean out of sync, if you look at the average size of these candles, you know, you can look at these and you can get an idea what the average size is. Then when you get one that's like 3 times the average size candle, that may not be a good trap. Got me? If this big candle did lock up a couple of candles inside, it may not be a good trap because it's so wide that there won't be any room for price action to move around to give you some profit. So everybody understand that? Now I also have an idea where this is likely to stop. And I'm going to look at the last closing price up here, and I'm going to put a mark here. Remember that? 1, 2, 3 candle wicks, 4 candle wicks. The last time we touched it, and Mike, this is the last time we touched it. Yes, we touched it back here in the past, but this was the last time we touched it. It fell. So I wouldn't be surprised to see a candle wick stick its head above here and maybe come all the way back down again. Now, I don't know if there was 10 o'clock news or not. I didn't check. That could certainly have something to do with it. But this gives me an idea. Remember, I'm looking at the closing price, the closing price, the closing price. No, it's the last candle that starts the thinking, Mike. It's the last candle that starts the thinking. Then you look for other evidence outside of that last candle. And remember on the other chart, we had a candle that traded above that level, and the next candle came right back and pushed it all the way back down again. So that last time gives you what has happened, the most accurate information. Then you can look back beyond that and see if there's other supporting information. Oh, Yellen testifying. Okay, well, that would certainly do it. But again, with the news and all that, as I said, that will change things dramatically if somebody's out here. And I call them the gray suits. But again, let's just see what happens. Well, it's a 15-minute candle, so that may take a while. But you'll see that we may end up getting a candle wick in this area. This is the last closing high. And I'll put another line out here at the high. So this is the area right in here. We may get a candle wick up in here. We may get a candle body that closes in here. but this is the area. You see that? No, she's not. No, Yellen's not accused of any. That's funny, Phil. Well, she will be accused. No, I didn't say anything about 10 o'clock rules. I didn't mention it, Rob. Rob is talking. Rob is saying, Lou, did you say 10 o'clock rules? No, what I said, Rob, was 10 o'clock news. Because the news in New York is usually at 8:30 and 10 o'clock, and then most announcements and testimony usually comes around 2 o'clock. So I mentioned 10 o'clock news. No problem. So going back to what I was saying, before this candle reached this line, I put the line in here based on these two highs. Remember that? That was before this wick got up in here. I put this line in. I said, this is where it's likely to stop. Why? What happened the last time it touched this line? Do you see that, Mike? And this happened right in front of you. I didn't hand pick. I didn't cherry pick. I'm working in a live environment, and I have no idea where the next tick is going, no more than anybody else in the world. But I do have an understanding of what to look for on the charts. And as I mentioned, I said this is likely the area where it will come up and stall out. And right now, that's pretty much what has happened. All right, everybody understand that? Yeah, Mike, if it seems different on your charts, it's because you may be adding more stuff that's not part of what we're learning here. I'm not saying that anything you learned was wrong. Believe me, I'm not. But I think you're trying to combine all the other stuff on top of what we're talking about. And all I'm saying is take what we're learning as a separate issue, like a separate box, a separate book. Okay? And you guys are typing, takes practice. Okay, Jay is asking me, he says, Lou, which chart do I use as a general picture? I don't use any individual chart as a general picture, Jay. What I look for is the best looking chart. I look for the chart that's got a setup on it that's easy for me to see. I might see it on the 15-minute chart. I might see it on the 1 hour chart. I might see it on an 8 hour chart. I might see it on a 5-minute chart. But what I'm looking for is the easiest chart pattern for me to recognize and take advantage of. I'm not looking to turn on a 15-minute chart and say, I only trade the 15-minute chart, and then the 15-minute chart's got nothing for me to work with. You get me? I've literally taken myself out of the market with that mindset. So, for instance, I would start, let's take the euro dollar. I would start at a daily. I'd say, is there something here I can work with? Yes or no? Then I go down to a lower time frame. Is there something here I can work with? Yes or no? And I look for the chart that's got the easiest looking setup to trade. Okay? And now Jay is asking, what do I see in the chart? I'm not sure what you're asking me, Jay. What I'm looking for is for the easiest looking chart to trade. Okay, if someone gave me a picture of 10 or 12 random charts and I didn't know what time frame they were, I didn't know whether they were gold or oil or Microsoft or Apple or the peso dollar. What I'm looking for is the chart that has the clearest looking pattern for me to trade. Does that make sense, Jay? What I'm looking for is the chart that has the clearest looking pattern. No gut feel. No, Phil. If you go on gut feel, you will get gutted. Okay? As many years goes on, yeah, you may develop a bit of a gut feel, but that's not even a gut feel. That's because your eyes have seen a certain thing so many times that you see it and you don't even realize you see it. Okay? Don't go by gut. The market will gut you. Okay? When you reach a point that, and it's called unconscious competence. Oh yeah, okay, yeah. Curry said it, unconscious competence, where you don't know why you know it, but you just know it. And it's kind of like what happens here with these naked charts and what I'm showing you. You know, like in 3 minutes, this candle is going to close. All right, and we'll see where it closes, and that will tell essentially the story. So I wouldn't be surprised if this candle closed within a couple of pips of where I drew this. Do you understand what I'm saying? Now, I don't know what was it made me draw this right there, but it could be that unconscious competence because I've just seen this so many times, and I try to find very, very simple and effective ways of explaining it so that we can make some money. Okay, Phil 919 is writing, we have a pattern. Oh, we're good at pattern recognition as humans, better than computers. That kind of gut feel thrown in. Um, Again, now I have to talk from my own personal experience. Being in the construction business, you don't build a house on a gut feeling. You build a house on plans, on blueprints, where you know part A fits into part B and you know where the toilet's going to go. Like you don't. So trading is the same thing. You're building a trading plan. You're building a trading scenario for yourself. That's why I break down the DNA thing into Legos. If you heard that other lesson, you know what I'm saying? Yeah, and Calzone is making a good point. Oh, look where this candle closed. Look where this 15-minute candle closed. And what did I say? I drew this way before that candle closed. Okay, so it's not like it's magic or anything. I just like when you see it enough times and practice it enough times, it will come to you, believe me. All right? But this is exactly what I was talking about. Exactly. Look at where that closed. Almost right to the pit where I drew that. All right? When Mike is saying when he's trading live, the blueprint doesn't seem to fit. Mike, that's because you don't yet have a blueprint. You're adding way too much. I mean, way, 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 way too much to the scenario. Now, I want to go into one other thing now. Let's take this situation where this candle closed. It spiked, hit this again. Now remember, every time it's hit this, it fell. You see that? It hit it here. So it fell here. It fell 20 points. It closed above the area, but the next candle pushed it back down, and that drop was about 13 pips. It closed again. It went in the area, closed outside of it, and then this drop was about 40 pips. So if we take 20, 20 and 40 and 13, let's average 20 pips. Would you say 20 pips? So I could say with some sense of surety, if this continues to go short, I would expect it to give me at least 20 pips, possibly down to here as a profit target. Does everyone understand that? I look back at history. Every time I've hit this area, what has price done? Every single time it's bounced off a minimum of 20 pips. So if this continues to play out short and I get a tradable pattern, I don't have a tradable pattern here yet based on the patterns we covered. If I were trading support and resistance, or if I were trading supply and demand, I would have had entries here. But we're not talking about supply and demand right now or support and resistance. Got me? We're talking about just some basic chart patterns that you could look for. Everybody follow me on that? Now, support and resistance traders had several entries here today. Supply and demand traders had one key entry here today. Well, maybe two entries, but one for sure. But where no, it's not complicated, Jay. Get that word out of your mind. It's not complicated. It's very simple. Okay, I'm trying to make this very, 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 very simple. If it becomes complicated, then either I didn't explain it properly or you're bringing other issues to the table and trying to combine it with this. I'm not saying you shouldn't do that. I'm just saying understand this first. Then when you really understand this first, then you could combine it with anything. You follow me? Okay, George, could you go over the pound dollar? Okay, let's go take a look. And George, what time frame on the pound dollar? I want to come back to this chart later. We only have a few minutes left. Oh, let me look at this dollar CAD. Oh, this was a trade from the other day, so I'll keep this so we can come back to it later. New chart, Forex, pound dollar. George, what time frame? Pound dollar? Oh, 4 hour. Okay, let's go look at the 4 hour. Okay, so George is saying we just broke uh, a price trap to the upside, George. Pound dollar. Okay. Yeah. Now I don't know which price. There are several price traps here. I don't know which one. I'm just going to pick an obvious one here, and I'm going to assume this one. I don't know if that's the one you're speaking of, George. Um, okay, I thought you said 4 hour, George. You're throwing me off here. Um, wait, George. Okay, George is typing very quickly. The first thing you typed was the 4 hour pound dollar price trap. So this is the 4 hour, this is the pound dollar, and this is the price trap. Now you're telling me something else. You're throwing me off. I want to stay with you. And now you're telling me to look at a 5 minute. Oh, you were wrong. 5 minute chart. Oh, okay. What should I do when you are not around after 11, Lou? You should go live your life. Okay, Jay. Jay's asking me what do we do after 11. If you have any questions, Jay, just drop them in my email, and drop your Skype ID in my email also. Oh wait, let me just pop this in the right way. I'm pretty sure you have this. Okay. Yeah, Rob is saying, there are some YouTube videos that one of the guys posted. I don't know who's recording them now. There were a couple of people recording him, but I know someone's probably recording him and just not telling me. I have to work out a way to record him on my side. Okay, so George, I want to go back to George in 5 minutes because I got a few minutes left. George is saying on the 5 minute. Okay, so let's go down to the 5 minute, George. Let me get rid of this so we're not confused. Oh, but before we leave, does everyone see where this price trap occurred? Okay, and I have a little bit of chart-based evidence because I have all uptrends. And remember, this is not a downtrend until I break this low. Do you see that? When I break this low, this is the last lowest low. When I break this low, then we're in a downtrend. Or better yet, actually, when I break this low, this is the last lowest low. When I break that low, then I'll think about downtrend. Until that happens, we're still in an uptrend. All right, and now let me just label this out a little bit. So control, that's 1 times the box right there. That's 2 times the box, and we've hit it already. So this price trap on the 4-hour broke out and gave us twice the box, and the box was let's say 25 pips. All right, and I won't pick a perfect entry, but it's gone 60 pips already. So again, I mean, we weren't there to see this trade, but I want you to see that if you pay attention to location, 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 here we are in an uptrend. We have not made a new low yet, so we're still in an uptrend. If I get a price trap, okay, and that's backed up by a strong uptrend, I am going to bias my trade long. Price-based evidence. Okay, chart-based evidence. Now George is saying, let's go to the 5-minute. Let me get these lines out of the way. And I'm glad we had those trades play out in a live environment. I didn't pull the trigger because next time you know what, I'm just going to pull them when I see them. All right. So, all right, George. I'm on the 5-minute. Now, I'm not sure what you were looking at. Let me just talk about what I see here. I see I am in a strong uptrend. Okay? I have to consider myself in an uptrend because I did not break this low to the downside. You see this low? I did not break this low to the downside. I got close right here, but if I put a line across, you'll see I never broke this low. Okay? So I'm still thinking long. Okay? And I'm only going to bias my trades long. So here was price trap number 1. Okay? Everybody follow that? Here is price trap number 2. But as I mentioned before, when I get a candle that's kind of like oversized compared to the average candle, I may not take that as a price trap. But how I will take this is as a pullback. Remember, we're making these, you see the candle wicks are higher than the prior candle wick? And I know you may not understand this, Jay, but look, this is a pullback right there. You see that? So when I get this oversized candle, I might not want to trade it as a price trap, but I could certainly go after the pullback candles. George's, but it was profitable to the downside. Where was this price trap profitable to the downside, George? Or maybe I'm looking at the wrong price trap. Give me an idea where the price trap was. You looked at the price trap up here, George? Is this what you're talking about? Okay. So let's look for chart-based evidence. Now, I'm not saying that you don't go against the grain, but I want chart-based evidence. So why do I have all of these guys stopping right here? See, that's that question I would ask myself. Do you follow that, George? Okay, so now I'm going to mark the highest close in this whole cluster right there. Then I'm going to go up and I'm going to mark this high. Everybody see that? What I'm getting at here? I want to know, why did this price trap occur here and everything's bottled up so tight? So now let me go back and see if there's any evidence of why this became so powerful. Does everybody see that? Any questions? Okay, so let's just look back in the past here a little bit. And remember, I'm looking in that general area. And this is another one. It looks like it's going to go back quite a way. Okay, let me go to a higher time frame. And it looks like we've got a cluster of candles here. But I want to get it a little bit better. Okay, and here we are. We're in a cluster here. This isn't as crystal clear as I like to see it. But if I go by the last touch, okay, the last touch was this white candle right here. It poked its nose above this little area. Let me mark this so we can find it. Now remember, Mike, this is for you also. I want to go back to the last touch in this area. The last touch. And either this one could be the last touch, Mike, or this one could be the last touch. Do you guys see that? Yeah, George, I don't want to talk about the DR3 and the WR1. I'm only talking price action. And for you guys that are trading on MetaTrader, this should really hit home because of all the changes that happened with MetaTrader upgrading to 600. The internet was flying back and forth with people who had indicators and stuff that they couldn't use or thought they wouldn't be able to use anymore because of the new build. So because they relied on this special super duper indicator and the platform upgraded, they were screwed. You get me? That's why knowing how to trade by looking at price action gives you an edge. So Mike, do you see the last touch was this one? Or you could say this one where we went above it, but here's the key, that closing price I keep telling you about. That closing price. This candle went above it, but closed below it. This candle touched it and then started a downhill trend from there. Do you see that? Yeah, there is a big price trap here. Rob is talking about this. But as I mentioned, Rob, when I see like a super oversized candle like that, when the one candle is way oversized compared to the average size candle, I try not to trade those. But that's good eyes. That's the price trap you're talking about, Rob? Okay. But you see how fast you can see him now. That's all I want you to do is just see him first. Seems like we ignore so much. What, Mike? You're driving me almost up a wall, but not quite. What is it that you're ignoring when the rule was, and I made it crystal clear, the very last touch of this price? What did the market do? So let's go back to where we are. And it's this little cluster of highs here from the 5-minute chart. We drew this from the 5-minute chart. Do you get that, Mike? So I'm not ignoring anything. I just want to know the last time we touched this area, what did the market do? Do you get that, Mike? That's all I want is the last touch. Then after the last touch, I look to see if there's any supporting evidence to go along with that. So remember, this little area was drawn from the 5-minute chart. So now I go back. And the last touch right there, or this candle, the last time we touched this price, the immediate reaction was a almost 200 pip drop. So when I come back to this area, and I'm going to go back to the 5-minute chart that George spoke of. Now, he probably didn't go back and look at it the way I just looked at it. You know, he may have just saw the price trap and said, oh, shit, there's a price trap. And it went short. You got me? I would have gone back, and I want to know why. Why did all the traders in the world on the pound dollar, all of them, they made this big, giant-ass candle, and then for the next 20 minutes, everybody sat on their hands. Remember the DNA of individual candles? They made this huge candle. And then look, for the next, what was it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. For the next hour, nobody in the entire world could figure out what to do. That's something I want to investigate. So that tells me there's something about this price that they're unclear of. So after going back and doing the research, yeah, I would have taken this short also. And what you could have done here was, let me set up a sniper here. You could have gone down to a 1 minute, and I don't know if this trend line will follow me down or not, but let's see. You could have gone to a 1 minute chart and looked for a close below this yellow line. Does everybody understand how I came to that? Any questions as to how I came to that? Guys, type a yes or no. Okay, so you guys understand how I came to this yellow line. I drew a sniper. I'm on the 5 minute. Looks like we're gonna break this. I'm putting a yellow line at the bottom of the price trap box, and now I go to a 1 minute, and then I want to take this trade. Or let me go back to the 5 minute because I want to see what my projected stop was. A 5 minute chart's not much of a stop, but we're looking at an 8 plus the spread. So let's say a 10 pip stop. Okay, so now I'm going to go down to the 1 minute, and can I get into this with it even better than a 10 pip stop? Okay, so here's my close below right here. Okay, and I can put my stop up here, which still comes out to about 10. That doesn't say very much, but you get the idea. Okay, I'll come down to the 1 minute, get the close below, and you could go right above the candle here, or you could come in here and do, again, the pullbacks. You got me? Or you could do the 1 minute price trap in the direction. You see how this candle is a trapping candle? Everyone got that? Or we could get in with the wedge. We couldn't make a new high and couldn't make a new low in here. So we've got the wedge. All right. Or I'll just show another 1, 2, 3. And when we get into fibs and all that, I'll put the fib expansion. This is the 1 and the 2. I connect the 3. And I usually have one more profit target down here that I program in, and it's the 200. But you could see that profit target number 1, profit target number 2 played out perfectly. Or you could enter this trade using whatever method you like that works for you, that's proven to be effective for you. All right? So we covered a lot of important ground because I wanted to clear. I'm glad that you guys asked the questions that you did because I could see there was still some confusion. All right, and any of you guys want to write out the rules? For right now, Jose, go with the MetaTrader 4 platform. I'm going to be using Pioneer Trading's CTrader shortly to do my charts. If anyone wants to write out the rules for the price trap, send them to my email address. I will grade them and send you back an answer. Remember, it's going to be about you writing your own book, you writing your own success manual. All right? One more question. Anybody unclear about any of this? I know, Mike, you're still a bit confused, but if you just keep it simple, 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 and look for chart-based evidence. Look for chart-based evidence before you pull your trigger. And Mike, in your case in particular, have that pencil and a blank piece of paper. Take the trade and then write down the reasons you saw on the chart for the trade. And then take a snapshot of the trade, okay? When you take these price traps at the right place, and if you make sure you always have some chart-based. Philip, I'm sorry, Brian is asking, what is the win-loss ratio? And the text is moving pretty quickly. What is the win-loss ratio based on your experience from these trades? The win-loss ratio with these are about 78% and higher for the price traps. But again, it's location, 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 and proper money management. Okay? Okay? Winning doesn't have to be complicated. We tend to complicate it for some reason. Jose, the reason I want you on the MetaTrader 4 initially is because it's easier to take snapshots of the screen. And do you follow me? It's easy to take a picture of the screen. If you ever had a question, you could just take a right click and take a picture of the screen. And, you could send it to me. You got that? All right. Well, thanks, Jose. I'm glad you found it enlightening. Now, the way you can thank me is by studying the trades properly and then taking some trades and sending me the results. There are a number of people that have sent me quite a few emails where they've done very, very well with the stuff we've gone over the last 8, 10 days. So I'm happy to see that. But I also see some people that were confusing some of the rules. That like well, I won't get into that, but there were some people that had some of the rules a bit confusing. Okay, yeah, I'll take airline tickets, Calzone. All right, as long as they serve pizza on the flight, I'm good. All right, so having said that, you guys have my email, and if you have any questions, send me an email on it. We may change the time for the lessons in the future because some people would like to trade, from 8 to 11 rather than, be in a class, and it's hard to do both. But I'll let you know about that way ahead of time. The other thing is that there will be a couple of nights a month where we will get together at 2 in the morning and look at London. Jose, talk to Mike. Jose, talk to Joe Kujanu and ask him to give you an MT4. Okay? All right. And if he doesn't, I'll give you a link to download MT4. But go through Joe first because he's got a pretty good deal with the spreads and all that. He's got a good thing set up there. So, all right. Yeah, I haven't worked out the time yet, Phil, for London, but 2 a.m. is usually when I wake up to trade London anyway. And we'll do a lesson and trade London at the same time if something shows up like we did today. We didn't trade today, but the trade set up. So just on what you guys found and what we looked at, there are actually four what do you call it, price traps that all would have been profitable in the 2 hours we were here. There were there were four price traps. No, this is not my bread and butter. Brian is asking me, is this my bread and butter trade? No, it's not. I have like a system I put together that use candles and a couple of indicators. That's my bread and butter. But this is an adjunct to that. Okay? All right? So that's pretty cool. All right, so I will see you guys again tomorrow, 8:30, same time, same place. Please, one.